All right, everyone, here we are with ticker symbol Nndm, Nano Dimensions. And before we jump into this chart, I want to say welcome to all my first-time viewers and investors. Welcome to my channel, Invest for Tomorrow. To all my subscribers, welcome back, and let's jump into this chart. So, Nano Dimensions has actually had some volatility. It ran up, slightly fell, but leveled off with some slight momentum here to stay above the 50-day moving average. Super important right now for the bulls. This resistance level from yesterday to today is super important still. 304, they're going to want to break through that. They were only able to break through it one time, and 304 still sits to be an important resistance level to pull further away from the 50-day moving average in an upward direction. Obviously, our resistance levels and supports have slightly changed. We're going to look at that right now, and this is still important for the next coming days and weeks if this was to change its trajectory and go in a downward direction. So keep that in mind, that 268 is a super important number. It's the lowest point reached in this bearish run since it hit those highs of $6, and I would keep a close eye on this stock if it's getting closer to those lows, right? So let's go ahead and see our new support levels and our new resistance levels. So this is a little bit more narrow based off of what we see in the charts. Keep those numbers in mind that I've talked about. They're super important still. Up here at 304 and down here at 268. Super important to keep that in mind. But I want us to look at what's important based off of what the chart is showing us from the last couple of hours of the day and how it reacted today. So the good news is we're above the 50-day moving average for the bulls, right? 291. We are above the 50-day moving average. Super important to keep it in mind. As long as we're above it, the bulls are in control. The moment we're below it, the bears are in control. So the tug of war is going to be interesting between the two, and we're going to have to see if the bulls can pull away from it. And the only way to do so is breaking through resistance. This resistance was touched twice within an hour, and that is 299. If the bulls can break through 299, turn that into a support and pull away from it to reach newer highs, their next goal is the highest point that they reached, which was up here at 307, and it quickly fell after that. So that's another important point. If that gets broken through, this will start to pull away, hit new resistance levels and newer highs. But before getting there, 299 is the first step, and the bulls need to break through it. It's not like they can try to, or if they want to, they can just hang out sideways. They're still above the bullish area because they're above the 50-day moving average. No, they need to continue this momentum, pull away from it, break through 299, turn that into a support, and start to reach new highs and new resistance levels. So super important. Now the 50-day moving average is 291. So like I said, that's an 8-cent difference from resistance and a 6-cent difference from the current price. And it's going to be very interesting for the bulls and the bears with their tug of war tomorrow to see who's dominating this chart and what's going to happen. Now, on the other hand, we have what the bears want. The bears are going to try to break through the 50-day moving average to get into bearish territory, but they also want to break through the lowest point that they reached after this bullish run and actually starting to bring it down today. And that's 287. The bears are going to want to break through 287, pull further away from the 50-day moving average to hit newer lows and new support levels. So I want to emphasize to all investors, if 287 is broken through, we're already in bearish territory once this breaks through 291. And if it breaks through 287, that's just confirmation that we're getting further away from the 50-day moving average in a downward direction. So I want to emphasize that if you're looking at this chart, my emphasis is pay close attention to how this stock is reacting if it breaks through 287. As always, I hope that you guys have these cues in mind and that they're helpful for tomorrow's trading day. If you found this video helpful and informative and you feel encouraged or inclined to subscribe, please do so. Don't forget to click on the bell to turn on all notifications and not miss a single video that I post. Share this with your friends and community, and don't forget to hit that like button to let me know you watch this video. Thank you guys so much for watching, and let's make some money. At the end of this video, there's going to be a pop-up video, and I go into detail about the S&P 500 index and how it's been rising up several points on scheduled dates. What happens on those scheduled dates, which are the dates that I circled here on the chart and we're going to see for ourselves? Well, the S&P 500 index rises up several points, and by doing so, they're bringing up several ticker symbols, not all of them, but most of them, up with them. And these ticker symbols are rising up 30 cents to $3 per share. And I know it doesn't sound like a lot, but per share, that does add up. And one thing I am really big on is profits. If you put $1 into the market and you get out with $2, you've made profits. You've done what the whole purpose of being in the market is for, to maximize profits and minimize losses. And with the Federal Reserve pumping the markets on these scheduled dates, bringing the S&P 500 index up also brings up individual ticker symbols with them. And again, 30 cents to $3 may not sound like a lot of profit per share, but that does add up. And like I say, profits are profits. So we're going to look here at some of the dates so that you guys can see what I talk about in the video. And it's a weekly series. I wouldn't want you guys to miss out on it. Definitely click on the video as it pops up at the end of the video and check it out. But here we are with one of the first pumps in the scheduled dates pumps. So the first one, since the last time that they had released this, they released this on September 14th, and the next one's coming up on October 14th, which is like a week from now. And on the 15th, they scheduled it. And as you can see, this is the 14th, and the 15th is this big green bar, and it rose up. So on the 14th, we were at around 33.84, and it rose up to 34.20. I mean, that's 40 points risen on the S&P 500 index, and that's creating that catalyst for individual ticker symbols to rise up 30 cents to $3. We're going to look at another one here, and the next one was on September 22nd. And here we are on the 21st, after falling from that last pump, and the market had been falling, and you could see that there is volatility on every single day of the market before the dates of the pumps, but on the dates of the pumps are the days that the most green happens, for the most part. Not every time, but for the most part. But on the 21st, which was a Monday, it was rising up, and it rose up to this point here. And the next one was the 22nd. So this is the last 21st candlestick, and this is the first 22nd candlesticks. And we were at 32.70. This one rose up all the way up here to this point right here. This was the last 22nd candlestick to 33.19. I mean, if we go back, we were at 32.70, 33.19. That's almost 50-point jump here for the S&P 500 index. And again, individual ticker symbols rose up with it, and it created that catalyst a little bit before the anticipation, and on that date it rose up. Now on this next pump, which was a little bit different, there was a catalyst formed beforehand, and it rose up to these highs on the 28th of about 33.59. It actually dipped on the date of the next pump, which we see it here, which was on the 29th of September, and the next one was on the 6th, which just happened yesterday, and it actually slightly dipped. Now, not every time is these pumps going to rise up the market like we've seen here by a lot of points, but it still rises it back up or levels it off from hitting newer lows and leveling off the market itself. Because if we look at the previous notes that I did beforehand, it was actually rising up with it. The volatility was there, but you were able to buy, like for example, how we bought here on the 15th and it rose up. Well, it's been falling and then very volatile here, up and down. Beforehand, you can buy at the beginning of the scheduled pump dates and hold a couple weeks and ride out several pumps, and you were going on your way up. But right now, even as the market's going down, it's a great opportunity to take advantage of the fact that the Federal Reserve is pumping the markets, and there's an opportunity to make profits. So here we are on the 29th, and it fell to lows of 33.28, and it rose up to these highs here of 33.49. I know it doesn't sound like a lot, but that's still a 20-point jump after dipping and recovering, and then it continued to work its way up to newer highs. Now here on the 6th, which on the 5th it started to rise, it leveled off. This is the last candlestick of the 5th coming up right now, and we're about to see it here. Yes, this is the last candlestick of the 5th, and it rose up and all the way to the last candlestick of the 6th, it rose up another 20 points. I mean, we're down here and it ended up around here. So right now, something I'm noticing is that these pumps are creating less of an effect on the market, but it's creating that upward direction from falling to newer lows, but it's still helping the market rise up. And even though the S&P 500 index is rising several points, there are individual ticker symbols rising up, like I said, 30 cents to $3. Check out the video. I go into more detail. I don't want you guys to miss out on this great information. Click on it, and thank you guys so much for watching, and let's make some money.